Hi, everyone. Welcome. Today, I am going to discuss how to set up a lease roll analysis in Excel using a rent roll. So, if you already know what a rent roll is, feel free to skip ahead a bit. But quickly, I'll just cover what a rent roll is. So, I'll hide this tab for a second. So, a rent roll is just a summation of the available spaces at a property as well as the currently active leases. So, I set up an example rent roll here that you can sort of take a look at. I got bored of coming up with random property names right about here, so that's why it's just example company 1 through 10. But this is a fairly simplistic rent roll. It just has the tenant name, the net rentable area that they're occupying. So you can see that this tenant is occupying 5,000 square feet, and the property has a total of 39,773 square feet. Next, we've got the lease start date and the current lease end date, as well as the annual base rent. Like I said, this is a fairly simplistic rent roll. Oftentimes, with commercial rent rolls, you'll also see rent step dates. You'll see if they have any termination or renewal options, which will be added to the rent roll. So this is fairly simplistic, but it'll work for our purposes. And then over here is an example of a lease roll analysis that I've set up. So what a lease roll analysis is, and you might hear the term lease roll schedule as well, is it shows you when square footage and base rent is expiring at your property. So if you look at this one, you can see that the bulk of the square footage as well as the bulk of the base rent is expiring in 2026. What these are useful for is if you own a property, you can kind of use it to look ahead and see when you need to really prepare to re-up your leasing program. If you're an investor, you can either create a lease roll schedule if the property owner doesn't have one, just so you can kind of see as you're looking to acquire a property when you might need to take on the most work. And it also tells you, that's sort of what it's mostly used for. Lenders also use this so this one's sort of set up more as with a lender view. So if you were to have a 10-year loan, this lease roll schedule shows you where the bulk of the square footage and the base rent is expiring during the loan term. So if you were a lender, you would look at this and you would say, if I'm extending a loan on a commercial property in 2022, then the property has most of its square footage and rent expiring in 2026. So that's going to be a risk that you kind of need to underwrite to. So that is a high level overview of what a lease roll schedule is. But let's kind of get into how to build a lease roll schedule. So if we go back to the rent roll, what I've done over here is you can kind of see my calcs. I set this up almost as the way I've set up these calcs is if you owned a property and you wanted to kind of maintain a dynamic lease roll schedule, then that's what I've done here. So I've just created an equals today function here. So every time you open the rent roll, the date will update. And the reason I've done that is so if we just look at my formula here, so what I'm basically saying is I'm using a series of if statements. If the property is equal to vacant, then the lease roll formula will just return vacant. If it's not vacant, then, and this is where this comes in, if the lease expiration date is less than today's date, then the property will return MTM, which means month to month. Oftentimes, commercial operators will allow a tenant to continue to occupy their space without renewing the lease on a month-to-month basis. And so that's what this would capture. So if, for instance, XYZ company had, instead of terminating their lease on, instead of having a termination of November 6th, 2026, they had a termination of, let's call it January 1st, 2022, and they were still in place, then we would call them a month-to-month tenant. So they're kind of just paying month-to-month. They can vacate at any time if they want. And that would usually happen, either during a negotiation period while they're sort of figuring out the next lease is a more permanent option or something along those lines. So, but getting back to the formula, so we go if the tenant name, so down here there's vacant, if the tenant name is equal to vacant, then we'll return vacant in our lease roll calc over here. If the date is less than today, then we return MTM. And then if neither of those things are true, then we just return the year. And so that's how I've set up this formula for our lease roll schedule. Going back to my lease roll tab, I've again this here is set up more as if you were extending a 10-year loan term, or if you're an operator, you might not want. I mean, you might not care if you've got a tenant with a lease expiring in 2042. That might be useful information for you just to know that you're going to have a long-term tenant for the next 20 years. But in terms of just whenever you want to check when the bulk of your rent or square footage is expiring, you might not necessarily care. So, but like I said, this is set up more as from a lender view, if a lender was going to extend a 10-year loan term. So what I've done here is this is just a count. So I'm referencing back to my rent roll tab and I'm counting how many times MTM appears, 2022, 2023. So we can see that in 2022, one lease is expiring in 2024, three are expiring in 26, three, and so on and so forth. The only thing I've done here, and this is common with if you ever look at structured finance CMBS offering documents, this is something they'll do. So sometimes they might include a sum of the leases, but oftentimes they'll hard code the vacant as 0 just because it's not a lease. So that's kind of the only edit I made there. Here we have net rentable area expiring. So again, I've just created a sum if. Referencing back, and this is pretty straightforward as well. You've got 2,654 square feet expiring in 2022, 11,850 expiring in 2026. Next column is percent of net rentable area. So that's just the amount of square foot expiring in a given year divided by the total square feet of the property. This is an important column. Cumulative percent of net rentable area expiring. So what I'm basically doing here is I'm just taking the square footage that's expiring in the current year and adding it to the previous amount from the prior year in this column. So we get down here, and what this tells you is, again, both from an operator and a lender view, you want to know when you really need to when the risk of the property is going to activate. And so if we look here, you've got 6.7% of your net rentable areas expiring in 2022. That's a fairly sizable amount of the property. We're already at, 97.5%. So we're at 97.5% occupancy currently. So that's just 100% minus the amount of vacant space. If we don't release the 2022 property that's expiring, then we go from 97.5 to 90%. So you're then at about 9% vacancy. So that's something you wanted to know. But moreover, this tells you that by the time 2026 rolls around, 75% of your current leases will have expired. And aside from the current vacant space, all of your current leases will have expired by 2030. So this is sort of a useful column to look at. Next, you've got base rent expiring. So this, again, it's the same as the net rentable area expiring formula, but we're just looking at base rent. It tells you that $35,000 essentially dollars of base rent expire in 2022, $100,000 in 2023, and so on and so forth. Same thing here, percent of base rent expiring, and then cumulative percent of base rent. So again, this is the same thing. looks like 100% of the base rent expires in 2030. The majority of it expires again in 2026. So if you're a lender and you're looking to extend a 10-year loan, that's something you're going to need to structure your loan terms around. So this table is kind of useful to look at both from a potential lender view, from an operator view. It just kind of gives you a quick glance of what's going to happen at the property in the however long you decide to build this table out to. And lastly, we have the base rent PSF expiring. So this just tells you what the base rent per square foot in any given year is that's expiring. So it's kind of useful to show you uh, the I guess the dollar the relative value of the leases that are expiring. So you can see that in 2026 the operator of this property is going to lose a lease that was yielding $12.57 per square foot. But in 2030, they're going to lose a lease that was yielding $13.98 per square foot. So this 12.57 relative to the rest of the leases of the property is probably below market. So this can tell the operator that if the tenant chooses to stay, this is a good time to renegotiate the lease terms and increase the rent. And then down here at the bottom, we just have the average. What I've done here, and you'll see this with most lease roll schedules, is I've excluded vacant space from the average calculations. We have total base rent at the property divided by total square footage minus the vacant space. And that's just because vacant space doesn't have rent, so it would throw off your average. But you can see here that the property average base rent PSF is $13. So this first lease that's expiring is right at $13. Maybe they can get more, but it's sort of right at the average for the property. But this lease here in 2025, 2026, 2028, these are all below the property average PSF. That might be an opportunity for them to renegotiate the base rent. But this is a lease roll schedule. It's kind of a quick overview on how to build it. You're just going to take the rent roll, and the easiest way is to just use one of these if formulas um, to come up with something that you can reference in the column to the left here. So hope everyone has a great day. Keep an eye out for future videos where we will be discussing other CRE and CMBS tools as well as different topics within the industry.